Consensus item. I have a minute and 24 seconds to deal with that very important issue now. Would each of you agree that a static standard does not work, a government standard that sets a standard today that tomorrow is outdated almost the day it's in effect? If you want to, Mr. Diamond, I'll let you start with that one.
Absolutely. It changes every day. It's going to be going on throughout our lives, and it is really critical.
Great. And while I have 55 seconds left, I want to mention anti-money laundering. It came up with in some of the comments that you made. Across the board, you all fill out suspicious activity reports. Could you raise your hand if you do not get any feedback from the government when you fill those out? Does anybody get? Let me ask it the other way. Could you raise your hand if you do get feedback on your suspicious activity reports? Great. I'll let the record reflect that none of these institutions get feedback from FinCEN. We have to work hard to make a better system where you actually get feedback and know that the information you're giving them is helping us catch the bad guys and keep our financial system clean. So we all are going to work with the Treasury Department and FinCEN to improve that process. Thank you all for your time today.
The gentleman from Connecticut, Mr. Himes, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you to the panel for being here today. I was sworn in January of 2009 and joined this committee shortly thereafter. And being on this committee at that time was like walking the next day through a city that had been the subject of a nuclear explosion. And the echoes of that go on today, and I think drive our politics. The American people saw trillions of dollars of value disappear for reasons they didn't fully understand. And then they saw this institution do what it had to do, which was to bail your institutions in many instances out. And so what the American people saw at the time was our government is there for the large financial institutions, but it wasn't there for us. And that delegitimized you, it delegitimized us, it delegitimized the regulators. And I think that's the single factor driving our politics today. Well, not the single factor, but an important factor driving our politics today. And so I don't ever want to go through that again, because I think we can maybe sustain one of those, but I don't think that this democracy can sustain another. So I just have one question for all of you, and it's actually a specific, slightly more specific version of Mr. Stiver's question. As you sit here today, what product, financing mechanism, or market do you think is generating systemic risk that we should pay attention to? If I'm doing the math right, that gives you each 30 seconds. So I'm just going to ask you to name a product or a market and very quickly what you think we should do about it, starting with Mr. Corbett.
People have talked a lot about leveraged lending and what that's done. I don't believe today it is systemic because most of it's being driven outside of the regulated financial system.
Thank you.
I'd say leverage lending and student lending, which is also growing rapidly and deteriorating very rapidly.
You know, I go back to what we discussed at our risk committees. I'd say right now a lot of focus on the international markets. As I said earlier, slowing global economy, that's going to give rise to credit risks. We've had a series of crises wave through.
We probably can't do anything about the global economy. I'm really looking for a product, a market, or a service that we should be worried about.
I'm sorry, I was taking your market as geographic. I apologize. You know, obviously the amount of credit in the corporate sector is large by historical standards. I don't think it's dangerous, but it is large and something I'd be watchful of.
Thank you.
I think in the end of the day, one of the lessons learned from the crisis was leverage, and the places that my colleagues mentioned in student lending is biggest on the personal side in terms of impact right now, and on the corporate side, it's leverage finance.
Mr. Moynihan, if I can, if leverage worries you, does that mean we should be thinking about increasing, generally speaking, capital reserves and capital standards?
We have capital standards that are tested under a worse scenario than the 2008 crisis, and we end up with more capital after that than we started the 2008 crisis with. That is the purpose of stress testing. The results are published every year for you to look at.
Okay, thank you. Mr. O'Hanlon.
I'd be concerned about student loans, and I'd also be concerned about anything that's pushing activity into the shadow banking system.
I would agree with both of those things.
Although not systemic yet, the growth in the shadow banking system is mentioned, and I'd also say there's been significant changes over the last 10 years in market structure, and none of it's been tested under stress. So more index product, ETF product, machines, not tested under stress.
Thank you. I've got another minute or so. Many of you mentioned shadow banking. So, Mr. Solomon, just to pick on you, are we talking hedge funds, private equity? What else are we talking? Am I right?
There's been significant credit formation. As we've been talking about, people talk about leverage lending. Sometimes they think about leverage lending on the banks of the large institutions here, but there's more and more direct lending being done in separate vehicles that's not regulated, not scrutinized. At the moment, I don't think it's systemic, but it is growing. It's obscured, and I think it's something over time, if the cycle continued, we want to have a closer look at.